welcome to the School of Stocks. I'm Victor Dongo, your host. I'm introducing to you this school so that you can understand what it is to pick the right stocks. It has been always a thing for people to wonder what exactly the processes are in investing in stocks, what it means to actually choose the right stock. You see, sometimes when people make a success out of it, others begin to wonder, how is it done? I have done it just now, I have done it before, and it doesn't seem to work. Well, if you are part of those who don't really understand what it is that we look for when we make the choices in picking stocks, then you should really strap and follow me through this journey. School of Stock is free for anyone that is interested in the process of buying stocks. I will encourage you to subscribe and always try and come to the channel to get new updates. We are on Facebook, YouTube, we are on Instagram, we are on Pinterest, we are on LinkedIn. So we are practically everywhere. So whichever social media you are on, you can always subscribe to us, and then you can get some of the best stuff that we have to offer. This journey, which I'm about to take you on, is going to start from the very basics. If you don't know anything, you are very much welcome to join us. Today, we shall be discussing the concept of shares and comparing it to something like real estate investments. To continue our discussion, let's assume that you have a choice to buy a piece of real estate, and you have another choice to buy the share of a company. We need to explain, first of all, what it is that the share of a company means. Let's look at it this way. If you want to buy a piece of real estate, so we have this real estate, and then we have company. Your real estate is a house. Let's assume. And then again, we have a company right here. Oftentimes, if you want to buy a real estate, you go it all alone. You go to the bank, you do all you need to do, you raise some cash, and you buy that real estate. In the case of a company, what normally happens is the company is divided into bits. Let's say we have this company right here. We are dividing it into bits. When you want to buy, what normally happens is you have a piece of it, just like a birthday cake. Now, that piece, one piece is called a share. So, a stock is same thing as a share, but when it is more than one. So if you have a collection of shares, you call it stock. Like a birthday cake, you can have one piece, you can have two pieces, you can have as many pieces as you want, so long as there is enough to go around and there is some leftover. So that is what a share is. Unlike real estate, the the company is broken down into pieces. Right now, let's assume that you have decided to buy these shares. Advantages of stocks. One, it is highly liquid. Stocks is perhaps the most liquid asset you can have, because you can easily convert that into cash at any point that you want. Two, pay less frictional costs compared to real estate. Imagine a situation whereby you want to go and buy a place. You have to pay the lawyer's fee, the land fee, you have to pay all sorts of fees. And then at the end of the day, you have spent a good percentage of your deposit on all sorts of fees. When it comes to buying stocks, it's really cheap, quite cheap. Number three, you can sell part of your shares. I've never seen, well, maybe not that really common, but I've not really seen a situation whereby you sell part of your house. No, I've not sell part of your house because you need cash. The only time people get cash off their asset is when they remortgage. Yeah. Number four, you can calculate your margin of safety when it comes to shares. Right, this is because you have so much financial information available on companies, what they do. When I mean financial information, you are talking about the income statement, balance sheet, cash flow, and all sorts of things. So now you know what the business does, and you can put together a very perfect picture of that. If you, for instance, going to buy a brand new piece of real estate, sometimes it doesn't always, it's not always that easy to do all the numbers and the coming quite right. But in shares, if you have the information that is right, which is very available in the public domain, you can really do quite well in this regard. The next point is that you have tons of companies to choose from. You have all the Apples, Microsoft, Google, whatever. Their shares are right out there. It's not like somebody's bought that piece of real estate, I cannot buy it anymore. No. I mean, just down the line, you can always, because the price of stocks go right like that, you can actually get to buy even at a more attractive price than the previous guy bought. Number six, you can diversify. You want to spread yourself into different aspects of the economy. For instance, you can, when you look at the information technology, you can go for things like Google, Microsoft. Then when you come to manufacturing, you can go for companies like Johnson & Johnson, Procter & Gamble. So, those are forms of diversification. Even there are companies who are into building real estates, renting them out. So in a way, you can actually buy the stocks of those companies when they are listed. 7, no yearly property tax. How beautiful is that? No? You don't, in the United Kingdom, we have what you call council tax. That you pay every month. If you buy stocks, you don't pay that. Of course, if your stocks gives you dividends, you can always, you have to pay something out of it if you are beyond your allowance for dividend income. So that's that. Number 8, you don't have to deal with planning permission or bad tenants or repair costs or change of tenancy when you buy stocks. No, you don't. None of those headaches come to you. Those who are in buy-to-let, you can attest to all these headaches. Sometimes you have very nasty tenants and they do a whole lot of horrible things. Some, you have to even renew their tenancy every 6 months. With stocks, you don't experience any of those things. These are some of the advantages I have thought of when it comes to the issue of stocks over real estate. You may have more. You can drop it right down below in the comment section. Let me know what other advantages you think it has. So next, we move on to the disadvantages of stocks. Yeah, some of the things that actually work for stocks. The number one disadvantage is the temptation to check prices daily. Because it's highly liquid, the prices are very available. So people tend to want to check what the stock price is for today. But in reality, the stock market is designed for the patient people to actually make money. If you're in a hurry, you can never make money in the stock market. No, you should resist the temptation of having to go every now and then to check your stock price. Even when the stock is going down, that doesn't really mean you are losing. It just means there is what you call an unrealized loss. The next point is the same daily price availability can make you very irrational, especially when you are on the losing side. Somebody does not want to see any red in their stock price. And I'm like, oh no, it's going down. Remember, that is just Mr. Market telling you, oh, this is what I want to offer you today if you're willing to sell. But if you are not willing, you shouldn't sell. This is the stock market. You always get a price. In fact, the price you're getting this minute is normally different from the one you're getting in the next minute. So you just keep bouncing right back, back and forth, depending. So what you should do is, look, you have paid for this stock. You have the value in your hand. Let Mr. Market do whatever it wants. Over time, if you are patient, because the stock market is designed for patient people, you will always have that same thing that you have, that stock that you have in your hand that you have held on to over the years creep up in value multiple times. Oh yes, can you see stocks? No, it's less visible. So some people don't really understand the power in that. Now, let me just quickly bring something to mind. Your MasterCard, your Visa card, they all have your money. That same MasterCard can have $1 million. It can have $2 right in it. You can't see it. You can't carry it. You cannot carry it. So really, that's where the trick is. So some people feel because you cannot see stocks, it's not valuable. No. So whenever you buy a share, just remember the company. If anything, just remember the building of that company, and say, I am part owner of that building, so I'm not going to part with it. So that itself should bring a visibility to your shares. Right. You see, I'm standing here right before you to actually bridge this gap of education, because knowledge is very important. If you have to make the right choice when it comes to stocks, you should have the knowledge to do it. This knowledge that I'm sharing with you is the knowledge that you really require to make the right choices when it comes to the issue of stock. Come on board and get this knowledge. It is free of charge. It is scalable. What I'm doing here, if you get it right, you can apply to a $1,000 fund, to a $100,000 fund. You can apply it to $10 million fund, as well as $10 billion fund. You see, it beats my imagination that fund managers can't even beat S&P 500. You can't beat it. They can't. There is a joke that goes around that fund management is a fee business looking for investors. Well, I'm just right here to change that perception, if you would allow me. Yes, your skill, no matter what level of resources, capital that you have, the knowledge I'm going to give to you, you will be able to apply this to your billion-dollar funds, and your returns to your investors is going to blow their minds out. They will not even count the costs of your services when you give them what it is that you have returned for them. But like I said, you have to follow me questions. If there is anything that I have discussed today that you do not understand, then please feel free to ask. It's important for your understanding, and then I will do all my best to give you the right answers. Thank you and have a lovely day.